Got the latest read on Canadian inflation this morning, dropping to a rate of 3.8% annualized in September. And in fact, month over month, there was a decline instead of the slight increase the economists were expecting. We saw lower prices in travel-related items, durable goods, also cooling. We have Avery Shenfeld joining us this morning, Managing Director and Chief Economist at CIBC Capital Markets. Avery, I see your colleagues are writing this morning, 3.8% inflation is never good, but maybe the best we could have hoped for.
Yeah, so we've still got a long way to go. I feel like the kids in the backseat of the car keep asking their parents, "Are we there yet?" And the Bank of Canada is going to say, "Well, no, we're not there because we want 2% inflation." And the various underlying measures of inflation that they track, these various core indicators, are still at sort of 3.7, 3.8. So we still have our work cut out for us. But better than what we've seen in the last couple of months where we had some upside surprises. This was a bit of welcome relief.
Core inflation a little more benign than expected, or certainly slowing down a bit anyway?
Slowing down a little bit, but really only back to where we were a few months ago. So, I think there's still some work to do. But the key is that the economy is soft. Unlike what we're seeing in the U.S., where we keep getting strong data on things like employment and retail sales and consumer spending, Canada's economy shrunk a bit in the second quarter, didn't seem to grow much in the third quarter. And so there's the cure for inflation, unfortunately the painful cure, which is slow economic growth. That will slow household income growth and take the wind out of purchasing power. But we have to be patient. We're not there yet, like the kids in the backseat of the car, but we're on the road to lower inflation if the economy remains as soft as it has been.
So your shop this morning suggesting in its commentary that inflation should continue to slow down in quarters ahead without the need for more rate hikes in Canada. So do you think we're done with interest rate increases in this country?
We should be. Unlike the U.S., the economy is now growing slow enough that we would expect the unemployment rate to continue to drift up, as it has over the course of this year, continue to drift up into 2024. And it's really getting an extra few points higher on the unemployment rate, reducing job vacancies rates. That's going to slow the wage gains that are fueling spending power in the economy. So it's not a happy story by any means, but to the extent that we were trying to deliver some pain in the economy to get inflation down, we're seeing that pain already. The governor has insisted he's not aiming at a recession. And with second and third quarter growth together averaging something close to zero, you really don't want to keep raising rates. You're going to have a recession if you do that.
That's interesting. So do I have that right, that the second and third quarter in Canada likely zero economic growth? So that sounds almost like a recession. I know it's not quite there.
It is in per capita terms. And it's a huge contrast with the U.S., where third quarter growth looks to be something like 4%. So, and that was after first half growth a little better than 2%. So if there's an economy showing that it's able to withstand higher rates, it's the U.S., and that could very well bring another Fed hike before the end of the year. But I think the Bank of Canada has to say that things are a little different on this side of the border, and our economy is not showing that same resilience.
Why is that? Is there any particular reason why our economy would be weaker?
Two big reasons. One is that Canadians are more indebted than Americans, and the other reason is that debt resets. So Americans have locked in 30-year mortgages at very low rates. Canadians are gradually feeling a dose of pain on their spending power by renewing their mortgages at higher rates. So that's a big difference between the two economies. And historically, it has meant that Canadian interest rates have typically peaked at a somewhat lower level than the U.S., and this time around seems to be more of the same.
I'm just thinking, Avery, I know I'm really broadening it here, but during the period of near zero interest rates, was that great for Canadians because we were getting home loans at very low prices compared to Americans?
We were. That's true that when they lock in these 30-year rates, they're not borrowing at the short end of the yield curve, so they don't get quite as low an interest rate for the privilege of that fixed rate for 30 years. So we did see a huge boom here related to that. Both countries, of course, had a lot of fiscal stimulus too. So we were really stepping on the gas in every form possible, which was the right thing to do at the height of the pandemic. But now we've needed to slow things down to get inflation under control. And the U.S. still, I think, has to do some further slowing if they're going to get their inflation rate back to 2%.
What is causing inflation right now, Avery? If you could, I know it's a very broad question, but is there one or two factors that are keeping the levels of price increases quite high?
We still have some supply constraints at work. So that's the part of inflation that could go away without economic pain. Remember that auto sales, for example, are being done at fairly high prices because it's hard to get a new car. Dealers are still short supply, so that could improve over time. So some of this is still supply bottlenecks, but some of it is just excess demand, not only for goods and services, but for labor. When people are getting a 4 or 5% pay increase, of course, we all think that our pay increase was well-deserved. But collectively, if everybody is getting that, or a lot of people are getting that creates some spending power that lets companies raise prices. And we really need a somewhat softer labor market, less generous pay hikes to slow spending power.
Avery, we've less than 30 seconds. Is there any sense in which our fairly concentrated market in terms of oligopolies or supposed oligopolies means that firms have more power to increase prices here? I'm sorry, we've less than 45 seconds left.
There are certainly some parts of the economy that aren't quite as competitive as the U.S., but I think the reality is you look at Canada, you look at the U.S., you look at Europe, we've seen big inflation everywhere in the major industrialized countries. So it's hard to make this a made in Canada story. And I think the kind of cooling in economic growth will eventually bring global inflation down as well.